It's over. It's finally over. The craziness of the COVID market has left us behind. Hallelujah. It's over. Okay, that might have been a small exaggeration. And the truth is, fortunately, no realtor can really predict where we're going. Unless you're Marty McFly and got a time machine. But I don't. So, what we can do though is take a look back at the real estate market and see what's been happening over the past few months, where things are sort of headed, and also give you some thoughts because in the past month we've had some great news come out. Whether you're a buyer or a seller, there's good news for both of you. Weird, but it happened. So we're going to talk a little bit about that today and of course get you caught up on all those numbers. So stick around as we head into our real estate market here in the Chicagoland area. Hi, I'm Jake Tishek, that guy that sells houses, realtor here in Illinois, and today we're going to be going over the real estate market here in the Chicagoland area. Now we'll also be touching a little bit about DuPage County as well as Will County so you can get caught up on that information. We'll also be talking a little bit about delinquencies, wherever those come, and finding out if we're going to be seeing foreclosures in our future. But also we're going to talk a little bit about prices. Is there a correction coming, and who should be worried about getting hurt by the past market? Now, let's start off as we usually do, talking about sold price. Our yearly average sold price here across the entire MLS rose to $335,300, which represents a 2.2% increase compared to May. Now, of course, with that number has been quick market times and lots of sales. For example, actually, our sold prices surged in June up to 22% when we look back at May's numbers. Now, part of that has been the fact that we have seen more homes come on the market in the past few months. But also, with prices and everything accelerating so quick, we've seen a lot of buyer's remorse and them canceling the contract rather quickly after getting involved. Some of it has been the fact that they've signed into as-is contracts and the homes just don't fit them and there's just too much repairs. Some of it has also been the fact that now prices aren't appraising for what they thought they would. And we're seeing those homes go back on the market. But with the fact that there's been so many multiple offer situations, there's usually an offer to fall back on. So we are seeing longer times from the date that shows contingent to closing, not always reflective in a traditional market. Now let's talk about new listings coming on the market. We saw 23,476 new homes come on the market here in June, which represents an 11% increase over last month. Now traditionally we see the new listings really peak in May and tail off. But with COVID restrictions loosening up, more sellers are feeling comfortable putting their home on the market, and we're definitely seeing that. And everybody appreciates that, buyers as well as sellers, because most sellers are, again, looking for a home to purchase to move into. So that's great news for really everybody involved. Now, when we look at the homes that have actually gone under contract, obviously with new listings coming on, we'd expect a surge in homes going under contract. Well, Will County did see an 11% increase in the amount of homes going under contract, as they've been heavily depleted from past months as far as inventory levels are concerned. But when we look across the entire MLS, things actually stayed relatively consistent, and that's a great sign, not that accelerated growth, hoping to see that inventory return. And when we do look at inventory levels, we saw a big increase as well, almost 23,000 homes available for sale across the entire MLS. And that is a big shift. That's actually up 15% when we compare it to May. As I mentioned, this is a big move, and it does represent an increase in our inventory when we look at our month supply of homes available. Now, also looking at delinquencies to keep up to see if we have some foreclosures coming our way, we saw just a small uptick to 4.73% in the amount of homes that are currently delinquent. However, still showing good signs as we have been progressing downward, and hopefully next month shows a reversal back to that decline as well. With more new homes coming on the market and contracts getting written on homes at the same rate, are we worried about home prices running off a cliff and falling? With so much activity, prices escalated quickly. And I don't see them falling just because of the fact we still have lots of demand and our inventory levels aren't where they need to be to help a correction come into play and see prices fall. But that does not mean everybody's going to come out of this unscathed. You see, with so much activity and so much competitiveness, unfortunately, sometimes home buyers found their emotions taking over common sense. During this time, offers on homes were written as is, saying they're not asking the buyer to do any repairs, which is fine. But what was really concerned is people are actually waiving all contingencies to do home inspections. So you don't know what was wrong with the home. So there are probably buyers now that have purchased a home that found out that home needs $15,000, $20,000 worth of repairs. And that wasn't necessarily calculated into their purchase price when they thought of purchasing the home, and are going to have to come up with these funds to create a comfortable, warm home. Not only that, people got nuts with appraisals. So if you had followed your realtor's advice and looked through the market and put together a strong offer, but didn't overpay and had your appraisal intact, you're pretty safe, as banks want to look out for their investment and make sure that the home you're purchasing today is going to be worth that in the future. However, there are people out there that were waiving their appraisal right or even guaranteeing paying over appraisal in order to get that house. So if a bank is telling you that homes are worth $350,000, but you wrote that offer through $365,000, they're willing to bring $15,000 to closing. Well, do you think people are going to pay that in the next few years? Well, hopefully prices appreciate enough where that does balance out. But at the same time, like I said, emotions just got the better of people, and there are going to be people who have some financial shortcomings because of this. But for the majority of Chicago homeowners, I feel that their investment will be proper over the years, as we do see more home buyers continue to enter the market, and the millennials that have been really looking to purchase a home start to get involved more and more and more. And as inventory levels rise, we should see a nice steady growth heading into the future, most likely at a more moderate rate. But if you're curious about your neighborhood, take a look at the link below for a free report instantly. That'll give you some homes that have recently sold in your neighborhood, or always give me a call. I'd be happy to chat. But if you're looking for tips on how to strengthen your offer in a negotiation to purchase a home, take a look at our video up here. And also YouTube thinks you'll like this video. I'm Jake Tishak with Keller Williams. Thanks for watching.